Right, so this happened. A Nigerian tycoon just bought the Panama Canal ports. Now folks, you know how sometimes you hear a piece of news and you have to check your calendar, make sure it's not April Fool's Day? Well, buckle up because this one is a doozy. Apparently, while we were all busy doom scrolling or arguing about pineapple on pizza, something massive happened in the world of global trade. A Nigerian billionaire, a name you might want to get familiar with, Adebayo Ogunlesi, through his company Global Infrastructure Partners, or GIP for those in the know, just casually dropped a cool $23 billion. And what did he buy with all that cash? Oh, just the ports of the Panama Canal. Yes, Panama Canal, the one that ships go through. It's like buying the main entrance to the world's biggest shopping center. It's one of those headlines that makes you spit out your tea or your coffee or whatever fancy beverage you're enjoying. Nigerian billionaire buys Panama Canal ports. You read it once, you read it twice, you think, surely that's a typo? Maybe he bought A of the Panama Canal? A very, very expensive picture? But no, it's real. This isn't just buying a fancy football club or a sprawling mansion in the Hollywood Hills, which, let's be honest, is already quite a statement. This is acquiring a critical piece of global infrastructure, a genuine linchpin of international commerce. It's a serious power move, the kind that makes entire continents sit up and take notice. The news, which trickled out around March of this year, 2025, is still sending ripples across the globe. Think about it for a second. The Panama Canal ports. These aren't just any old docks where a few fishing boats tie up. These are the gateways to one of the most important maritime shortcuts on the planet. For decades, these ports have been synonymous with, well, not Nigerian billionaires, to be frank. They were originally built by the Americans, a massive feat of engineering and a symbol of early 20th century ambition. Now the keys, or at least the operational control of these vital ports, are in the hands of an African-led investment firm. This is more than just a business transaction. It's a statement, a sign of shifting tides in the world of global finance and power. This whole situation is just fascinating, isn't it? It's like finding out your quiet neighbor just bought the local motorway. You'd have questions, right? Lots of them. How did this happen? Who is this Adebayo Ogunlesi really? And what does it mean when a piece of infrastructure this significant changes hands in such a dramatic fashion? It's a story about money, sure, but it's also about vision, about ambition, and about the changing face of global power. Forget what you thought you knew about who owns what. The game is clearly evolving, and new players are stepping onto the field, ready to make some very big moves indeed. So, let's dive in, shall we? Alright, so before we get too carried away with the billions and the boardroom drama, let's talk about the star of the show, the Panama Canal itself. For anyone who slept through geography class or maybe just got distracted wondering why it's called Greenland when it's covered in ice, here's a quick rundown. The Panama Canal is, to put it mildly, a very big deal. It's an 82-kilometer, that's about 51 miles for my American friends, man-made waterway in Panama that connects the Atlantic Ocean with the Pacific Ocean. Think of it as the ultimate shortcut for ships, saving them the incredibly long and often dangerous trip around Cape Horn at the southern tip of South America. Building this thing was no walk in the park, let me tell you. It was an epic undertaking, fraught with challenges. We're talking dense jungles, torrential rain, tropical diseases like malaria and yellow fever that claimed thousands of lives, and engineering puzzles that would make your head spin. The French started the project in the late 19th century, but eventually threw in the towel. Then, the United States stepped in, completed the canal, and opened it in 1914. For a long time, it was under American control, a symbol of their engineering prowess and global reach. It fundamentally changed global shipping routes, making trade faster, cheaper, and more efficient. It's not just a canal, it's a legend in the world of engineering. So you see, this isn't just some random bit of water, it's a critical artery of global commerce. Thousands of ships carrying everything from bananas to cars to the latest smartphones pass through it every year. If the Panama Canal sneezes, the global economy catches a cold. Its ports, the ones Mr. Ogunlesi's firm just acquired, are the crucial entry and exit points, the service stations, the logistical hubs that keep the whole operation running smoothly. They handle the loading and unloading of cargo, ship repairs, and all the other essential services that make this maritime superhighway function. Without these ports operating efficiently, the canal itself would be, well, just a very scenic, very long swimming pool. The strategic importance cannot be overstated. Controlling these ports means influencing a significant portion of world trade, It's like owning the ticket booths and the refreshment stands at the biggest concert venue on Earth. Everyone who wants to see the show, or in this case move their goods from one ocean to another quickly, has to come through your gates. This is why the original construction was such a geopolitical event, and why its transfer to Panamanian control at the end of 1999 was a huge deal. And now, this new chapter with a private African-led firm taking over the ports, adds another fascinating layer to its already rich history. It's a testament to how times are changing, and who holds the keys to global commerce. Right, let's talk about the price tag, because it's a number that makes your eyes water. $23 billion. That's $23,000 million. So many zeros. To put that into perspective, that's more than the annual GDP of quite a few countries. You could buy a whole fleet of private jets, a string of private islands, or, if you're feeling generous, an awful lot of jollof rice for everyone. This isn't just pocket change found down the back of the world's sofa. This is a monumental investment, signaling the immense value placed on these Panamanian port assets. It underscores just how critical these pieces of infrastructure are to the global economic machine. When a company like Global Infrastructure Partners decides to splash out $23 billion, it's not a whim. It's a calculated move based on long-term projections and the understanding that these ports are, quite literally, money-making machines. They generate revenue from docking fees, cargo handling, storage, and a host of other services essential to the thousands of ships that use the canal annually. This acquisition is a bet on the continued and likely growing importance of global trade. Despite all the talk of deglobalization or regionalization, the sheer volume of stuff moving around the world suggests that strategic transit points like the Panama Canal will remain indispensable for a very long time to come. The sheer scale of this investment also tells us something about the kind of players now operating at the highest levels of infrastructure finance. GIP, the firm behind the purchase, isn't some plucky startup. They are a major league global infrastructure investment firm. They manage tens of billions of dollars and have a portfolio that includes airports, like London Gatwick for instance, energy facilities, and transport networks across the world. So when they make a move like this, it's a sign that the asset is considered top tier, a crown jewel in the world of infrastructure. It's a massive vote of confidence in the future profitability and strategic importance of the Panama Canal ports. Moreover, this $23 billion figure sends a powerful message to the market. It says that premier infrastructure assets command premium prices, and that there are investors out there with the capital and the ambition to acquire them. It also highlights the increasing financialization of essential infrastructure. These are no longer just state-owned utilities. They are actively traded, high-value assets attracting significant private capital from sophisticated global investors. This deal, one of the largest of its kind in recent memory for port infrastructure, will undoubtedly be scrutinized and analyzed for years to come, setting a benchmark for future transactions in the sector. It's a big number for a big deal. So, who is the man behind this jaw-dropping $23 billion deal? Let's talk about Adebayo Ogunlesi. Now, this isn't some overnight success story, some lottery winner who decided to buy a canal. Mr. Ogunlesi is a highly respected figure in the world of finance and investment, a Nigerian-born trailblazer who has built an incredible career. He's the chairman and CEO of Global Infrastructure Partners, GIP, the firm that just wrote that very large check. He's not just a name on a letterhead, he's the driving force behind one of the world's leading infrastructure investment funds. This man knows his way around a balance sheet and then some. Educated at Oxford University and Harvard Law School and Harvard Business School, yes, all three, just in case one Ivy League wasn't enough. Ogunlesi has a formidable intellect and a deep understanding of global markets. Before co-founding GIP in 2006, he had a distinguished career in investment banking, notably at Credit Suisse, where he rose to very senior positions, including head of global investment banking. So when it comes to complex financial deals and identifying valuable long-term assets, he's got a track record that speaks volumes. He's known for his sharp mind, his strategic thinking, and his ability to see opportunities where others might not. Global Infrastructure Partners, under his leadership, has become a powerhouse. They don't invest in fleeting trends or flashy tech startups that might disappear tomorrow. GIP focuses on large-scale, essential infrastructure assets, things like airports, seaports, and energy generation facilities. These are assets that form the backbone of economies, providing essential services and often offering stable, long-term returns. Their portfolio is impressive, including significant stakes in major airports like London Gatwick and Sydney Airport, as well as other critical infrastructure across the globe. So, the acquisition of the Panama Canal ports fits perfectly within their investment philosophy: big, essential, and globally significant. What makes Mr. Ogunlesi's story particularly compelling, especially in the context of this deal, is his Nigerian heritage. In a world where global finance has often been dominated by figures from traditional Western financial capitals, his success and the scale of GIP's operations represent a significant shift. He's not just a successful investor, he's a symbol of the increasing influence of African talent and capital on the world stage. This Panama Canal ports deal isn't just a GIP achievement, it's also a moment that shines a spotlight on the capabilities and ambitions of African business leaders in the very top echelons of global enterprise. He's playing chess while others are playing checkers, and he just captured a very important piece. Section 5, Strategic Shopping. Why buy a bunch of ports in Panama? Now, you might be thinking, okay, $23 billion is a lot of money. Why spend it on some ports in Panama of all places? Well, it turns out buying the Panama Canal ports isn't like buying a slightly used collection of seaside souvenirs. This is strategic shopping on an epic scale. These ports are not just concrete wharves and cranes, they are absolutely vital cogs in the giant machine of global trade. Think about it. The Panama Canal is one of only 2 major artificial waterways that drastically cut down interocean shipping times, the other being the Suez Canal. Owning the access points to such a route is like owning the keys to a very exclusive, very busy highway. The strategic value comes from several angles. Firstly, there's the sheer volume of traffic. Around 3 to 5% of global maritime trade passes through the Panama Canal each year. That's hundreds of millions of tons of cargo, from oil and gas to grain and consumer goods. Every ship that uses the canal, and many that tranship cargo there, will likely interact with these ports, generating consistent revenue. Secondly, in a world of complex supply chains, efficiency and reliability are king. Well-managed ports in a critical location like Panama can offer significant advantages to shipping lines, making them incredibly attractive assets. GIP is betting that they can maintain or even enhance that efficiency. Furthermore, the acquisition gives GIP a significant say in a key part of the global logistics network. This isn't just about collecting fees, it's about having influence over how goods move around the planet. With the ongoing shifts in global trade patterns, the rise of new manufacturing hubs, and the increasing importance of resilient supply chains, controlling such strategic assets offers a unique vantage point and a degree of leverage. It also positions GIP to benefit from future growth in trade between Asia and the Americas, a route heavily reliant on the Panama Canal. They are not just buying current capacity, they are investing in future trade flows, which many economists predict will continue to grow. And let's not forget the potential for development and expansion. While the ports are already major operations, an investor like GIP, with deep pockets and expertise in infrastructure management, might see opportunities for further modernization, expansion of services, or integration with other logistical operations. They could invest in new technologies, improve turnaround times, or develop ancillary businesses. This isn't just a passive investment, it's an opportunity to actively manage and enhance the value of a world-class asset. So, it's not just a shopping spree, it's a calculated move to secure a prime piece of real estate on the global trade map, with an eye firmly on long-term value and strategic influence. Section 6, Global Trade's New Groove. How this deal changes the shipping game. So, one man's investment firm buys some ports. Big deal for him, maybe his investors, but what about the rest of us? How does this $23 billion handshake in Panama actually change the way stuff moves around the world? Well, it's potentially quite significant. When a major piece of global infrastructure like the Panama Canal ports changes hands, especially to a private equity giant like GIP, it can send ripples through the entire shipping industry and beyond. It's like when a new DJ takes over at your favorite club. The music might change, the vibe might shift, and suddenly everyone's dancing to a slightly different beat. This could be global trade finding its new groove. Firstly, there's the question of operational priorities. GIP is an infrastructure investment firm, and their primary goal, understandably, is to generate returns for their investors. This could lead to a renewed focus on efficiency, cost-effectiveness, and profitability at the ports. This might mean new investments in technology, streamlined processes, and perhaps different pricing structures for services. For shipping companies, this could translate into better service, faster turnaround times, or potentially changes in port fees. Everyone involved in using the canal, from the massive container lines to smaller cargo vessels, will be watching very closely to see how GIP manages these crucial assets. Secondly, this acquisition could influence competitive dynamics among ports and shipping routes. The Panama Canal competes with other routes like the Suez Canal or even intermodal land bridges across the U.S. The way its ports are managed, their cost and their efficiency can make the Panama route more or less attractive. If GIP invests heavily and improves the facilities and services, it could strengthen the canal's competitive position. This, in turn, could affect decisions made by logistics planners worldwide about where to route their cargo, potentially shifting some trade flows. It's all interconnected, like a giant watery game of chess where every move has consequences. Finally, and perhaps most subtly, this deal signals a broader trend of private capital playing an increasingly dominant role in owning and operating what used to be public or quasi-public infrastructure. While private involvement isn't new, the scale and profile of this deal are noteworthy. It raises questions about governance, regulation, and ensuring that these vital global assets are managed not just for private profit, but also with consideration for the public interest and the stability of global trade. The new ownership structure, led by a firm with a global footprint but headquartered outside the traditional Western powers, also adds a new dimension to the geopolitics of trade infrastructure. It's a new chapter, and the script is still being written. Section 7. Look who's investing now. Africa's growing clout on the world stage. This Panama Canal ports deal isn't just a story about infrastructure or finance, it's also a massive headline in the story of Africa's evolving role in the global economy. For too long, the narrative around Africa and international finance has been, shall we say, a little one-sided. Often it's been about aid, debt, or foreign companies coming in to extract resources. But Adebayo Ogunlesi's GIP, acquiring such a high-profile global asset for a staggering $23 billion, that flips the script completely. It's like your cousin who everyone underestimated suddenly showing up to the family reunion in a private jet, having bought the company that makes the jets. This is a clear signal of the rising influence and financial firepower of African investors and African-led businesses on the global stage. We're not just talking about regional champions anymore. We're seeing African entrepreneurs and investment firms making bold, strategic moves far beyond the continent's borders. This acquisition by GIP, a firm co-founded and led by a Nigerian, is perhaps one of the most visible examples of this trend. It demonstrates a capacity to raise enormous amounts of capital, to identify world-class investment opportunities, and to execute complex, large-scale transactions at the highest international level. It's a powerful statement of intent. This isn't happening in a vacuum, of course. It reflects broader economic growth and deepening capital markets within several African nations, as well as the increasing sophistication and global outlook of its business leaders. Entrepreneurs and investors from countries like Nigeria, South Africa, Kenya, and Egypt, among others, are increasingly looking for opportunities worldwide, bringing not only capital but also unique perspectives and expertise. This Panama deal could serve as an inspiration, encouraging even more cross-border investment, and showcasing the potential for African entities to become major players in global finance and infrastructure. It challenges outdated perceptions and highlights a continent on the move. The implications of this growing African clout are manifold. It means a diversification of global capital sources, which can be healthy for the world economy. It means African perspectives are more likely to be brought to bear on the management of global assets. And it can also foster stronger economic ties between Africa and other regions, not just as a recipient of investment but as a source of it. This Panama Canal ports deal is a landmark, a moment that says African investors are not just at the table, they are increasingly in a position to buy the table and the entire conference center too. It's a sign of a more multipolar world, where economic power is more widely distributed. Section 8. Smooth sailing or choppy waters. Potential wins and worries. Whenever a deal this big goes down, especially involving such a critical piece of global kit, everyone starts wondering, Is this good news, bad news, or a bit of both? With Adebayo Ogunlesi's GIP taking the helm of the Panama Canal ports, there are definitely some exciting potential upsides. But like any voyage into new waters, there might be a few hidden rocks or unexpected squalls to navigate. It's not just about who owns the ports but how they'll be run, and what that means for everyone from shipping magnates to the folks waiting for their online orders. On the sunny side, a firm like GIP, with its vast experience in managing major infrastructure projects worldwide, could bring a fresh wave of investment and innovation to the Panama Canal ports. They have the capital and the know-how to upgrade facilities, implement cutting-edge technologies, and streamline operations. This could lead to increased efficiency, faster turnaround times for ships, and an overall boost to the competitiveness of the Panama route. For businesses that rely on the canal, this could mean lower costs, more reliable supply chains, and ultimately benefits for consumers. More efficient ports can also stimulate local economic activity in Panama, creating jobs and opportunities. However, with private equity ownership, there are always questions that bubble to the surface. The primary objective of a firm like GIP is, quite naturally, to maximize returns for its investors. This could lead to pressures to cut costs in ways that might affect service quality or workforce conditions if not carefully managed. There might also be concerns about potential increases in port fees as GIP seeks to recoup its massive $23 billion investment. Striking the right balance between profitability and providing an affordable, efficient service to the global shipping community will be a key challenge. Regulators in Panama and international shipping bodies will undoubtedly be keeping a very close eye on developments. Furthermore, the strategic nature of the Panama Canal means that any change in management or operational philosophy of its ports can have geopolitical ripples. While GIP is a global firm, its leadership and significant capital links to various parts of the world could subtly influence perceptions or relationships. Ensuring transparency, fair access for all nations, and maintaining the neutrality of this vital global waterway will be paramount. The new custodians of these ports have a big responsibility, not just to their shareholders, but to the smooth functioning of international trade. It's a balancing act, and the world will be watching to see if they can keep the ships sailing smoothly. Section 9. The future is here, and it's got an African accent. What's next? So, here we are. A Nigerian-led firm now manages the ports of one of the world's most strategic waterways. If you'd predicted this 20 years ago, people might have offered you a cup of tea and a quiet lie down, but it's 2025 and the world is, as they say, a-changin'. This isn't just a business deal, it's a snapshot of a future that's arriving faster than many expected. A future where the lines on the map of global economic power are being redrawn, and where new voices with new perspectives, and yes, sometimes with an African accent, are calling some of the biggest shots. What does this all mean for tomorrow's world? For starters, expect to see more of this. The GIP acquisition of the Panama Canal ports is a blockbuster, but it's part of a larger symphony of African capital and entrepreneurship, making its mark globally. As economies across Africa continue to grow and mature, as more individuals accumulate significant wealth, and as investment firms gain international experience and credibility, we're likely to see more African entities competing for and acquiring major assets around the world. This could be in infrastructure, technology, manufacturing, or any number of sectors. The ambition is there, the capital is increasingly available, and the global stage is beckoning. This shift could also lead to a more diversified and, dare I say, more interesting global economic landscape. For decades, the flow of major investment capital has been predominantly west to east or north to south. The rise of significant investors from Africa, Asia, and Latin America introduces new dynamics, new priorities, and potentially new models of doing business. It could foster healthier competition and perhaps even more equitable partnerships. The way GIP manages the Panama Canal ports, for instance, could set a precedent for how global infrastructure assets are stewarded by non-traditional global powers, potentially blending profit motives with a keen awareness of developmental impact. Ultimately, this deal is a powerful reminder that talent, ambition, and economic clout are not confined to any one continent or any one group of people. It's a testament to Adebayo Ogunlesi's vision and GIP's capabilities, certainly, but it's also a broader indicator of a world where opportunities are becoming more democratized and the players are becoming more diverse. The future of global trade and investment won't just be shaped in New York, London, or Tokyo, it will also be influenced from Lagos, Johannesburg, Nairobi, and beyond. So, keep an eye on the horizon, because the next big deal might just come from somewhere you least expect it, changing the game once again. It's an exciting time to be alive, isn't it?